Hey everyone, have you ever looked at a stock chart and felt like you were trying to read a completely foreign language? Well, today we're going to decode it. We're going to learn how to read the market's story by focusing on three key elements: candlesticks, price gaps, and volume. By the end of this, you'll be able to see the narrative behind the numbers.
Let's be honest, a chart like this can look pretty intimidating. It just seems like a chaotic, random jumble of green and red bars. It's no wonder so many people feel overwhelmed before they even start. But what if I told you there's a story hidden in all that chaos?
So let's just shift our perspective for a minute. What if this isn't random noise at all? What if it's a story? A play-by-play narrative told one candle at a time about the constant battle between buyers and sellers. And once you learn the language, you can read that story as it unfolds.
Our first step is to learn the alphabet of the market, and that begins with Japanese candlesticks. Think of each candle as a single word in the story of a trading day.
Now don't get thrown off by all the different shapes and colors. Every single one of these candles, no matter what it looks like, tells us the same four things. These four data points are the foundation for everything else we're about to learn.
So what are they? You have the open, which is where the session started, and the close, where it ended. The thick part, called the body, shows you the difference between those two. And those thin lines, the wicks, show you the absolute highest and lowest prices hit during the session. It's an entire day's worth of action, all summarized in one simple shape.
Here is a super important concept to get down: effort versus result. The candlestick's body is the result. It tells us who won the day, but the effort is just as crucial, and that's where volume, our third element, comes into play.
Okay, on to our second element. If candlesticks are the words, then price gaps are the exclamation points. They are the high drama moments in the market story.
A gap happens when something significant occurs while the market is closed, like overnight or over a weekend. It could be big economic news or a company's earnings report. This news causes such a sudden shift in sentiment that the price opens much higher or lower than the previous day's close, leaving a literal gap on the chart where no trading occurred.
And here's a perfect example of what we call a breakaway gap. See how the price literally breaks away from that prior trading range? And look at that huge spike in volume at the bottom. When you see a gap like this combined with heavy volume, it's a powerful sign that the old trend is over and a brand new one has just been born.
Which brings us to our final and arguably most important element, volume. If candles are the words and gaps are the punctuation, then volume is the tone of voice. It tells you the emotion, the conviction, and the real power behind any price move.
I absolutely love this quote because it is just so true. Price tells you what happened, but volume tells you the how and the why. Without it, you're only ever getting half the story.
Reading volume is actually pretty simple. Each bar at the bottom corresponds to the candlestick right above it. A big green bar means a lot of buying participation, and a big red bar means a lot of selling pressure.
So what's the key takeaway here? High volume is like a vote of confidence. If a stock breaks out to a new high on massive volume, it's a sign that the big players are on board. But if it breaks out on low, weak volume, that's a warning sign that the move might not have the fuel to last.
All right, so we've learned the words, the punctuation, and the tone of voice. Now it's time to put it all together and read the whole story.
Here's a simple three-step process you can use to decode any chart. Let's apply it to that breakaway gap we just looked at. First, read the candle right after the gap. It's a big, strong green candle. Buyers clearly won the day. Second, look for gaps. We see a huge one, meaning some surprise event changed the narrative. And third, check the volume. It's massive, telling us this move is backed by real money and strong conviction. See? Putting all three together, we get a clear story of a powerful trend change.
By asking these three simple questions, you've gone from being a passive observer to an active reader of the market story. You now have the tools to decode any chart you look at. So what are you waiting for? Go find out what the market is telling you.